Hey everyone, it's Julie here with TipRanks, and today we're taking a look at 3 S&P 500 stocks with some of the highest upside potential. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at the holdings of the S&P 500 and specifically narrowing in on 3 strong buy stocks with price targets that imply some pretty big upside potential. We're going to take a look at these companies, what it is that they do, and what those Wall Street analysts are predicting for the stock's future. Now we found these taking a look at the S&P 500 index on TipRanks. Right from the TipRanks homepage, you can see all the major indexes here right at the top, and by clicking on them, you can open up further details. We're going into the holdings here of the S&P 500 and adding in some different filters, including the analyst consensus. We want strong buy stocks with some big upside potential, and that gave us our list down below. Just before we get into these 3 companies, this is a friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's get right into our 3 strong buy S&P 500 stocks. First up, we had the stock with the 3rd highest upside potential, that is MGM Resorts. They trade under the ticker MGM, currently priced at $34.85. This stock is a bit beaten up this past year, falling 18% in the last 1 year and down 14.5% in the last 3 months. MGM Resorts is a well-known owner and operator of casino resorts. They work to create immersive, iconic experiences through their suite of Las Vegas-inspired brands. Their portfolio encompasses 31 unique hotel and gaming destinations globally, including some of the most recognizable resort brands in the industry. That includes Aria, Fidera, Bellagio, Borgata, MGM Grand, and more. The company also offers their BetMGM, which is their exclusive sports betting partner, allowing both online and in-person sports betting to the MGM resorts. While there have been some concerns about growth plateauing in Macau, MGM Resorts did come out with both an earnings and revenue beat in their last quarter on July 31st. They reported Q2 earnings per share of 86 cents, beating expectations by 26 cents per share and growing 45% year over year. Revenue came in at $4.3 billion, which did increase over 9% year over year and beat estimates by over $100 million. They also saw record second quarter MGM China adjusted property EBITDA of $294 million, which increased 40% year over year. Plenty of Wall Street analysts weighing in on MGM following that earnings report, including one from JMP Securities. They did reiterate a buy rating, but slightly lowered their price target. They noted that the quarter was in line with the firm's expectations and slightly ahead of consensus, and the third quarter setup appears to be in line with their prior expectations, while Q4 now brings some uncertainty. But the mid-double-digit free cash flow per share growth is sustainable, with Las Vegas pricing initiatives, domestic online inflection in future years, and the digital initiatives outside the U.S. and the consistency out of Macau. The stock currently has 13 analyst ratings, coming in as a strong buy with 11 buys and 2 holds. And the average price target comes in above $55 per share, implying an upside potential of nearly 60%. Looking at those ratings down below, on the low end, we do have a recent hold rating at $43, which would be an upside of 23%, and we have a high-end price target of $63, implying an upside of 80%. Our second strong buy S&P 500 stock is Schlumberger. They trade under the ticker SLB, currently priced above $39 per share. This is another stock that has been struggling this past year, down 34%, and in the last 3 months falling over 12%. Schlumberger is a global technology company focused on the oil and gas and energy industry. They provide technology and systems to the energy industry, with their work focusing on decarbonization, energy innovation, new energy systems, and digital solutions. Their services include field development and hydrocarbon production, carbon management, reservoir interpretation and data processing, and well construction and production improvement. The company did share a solid Q2 earnings report with both an earnings and revenue beat back on July 19th. Their Q2 earnings per share came in at 85 cents, beating expectations by 2 cents, and revenue of $9.14 billion increased 5% sequentially, beating expectations by $50 million. They had adjusted EBITDA of $2.29 billion, which increased 11%, and cash flow from operations was $1.44 billion. Following that quarterly earnings report, several Wall Street analysts have increased their price targets, including ones at Stifel and Evercore ISI. These Stifel analysts noted that their Q2 results, Q3 guidance, and 2024 outlook support their positive outlook for the shares. Based on their track record of success, recent reports from Kimberlite Research, and operating results, they're confident that SLB is very well positioned to benefit from rising international and offshore activity, as well as its new digital offerings. The analyst from Evercore said that SLB is exceptionally well positioned for the accelerating international and offshore upcycle, which remains in the early stages. Schlumberger's strong buy consensus is based on 16 current analyst ratings, with 15 buys and just one hold. The average price target comes in at $66 for an upside potential of 67%. Looking at those ratings down below, on the low end we do have our one hold rating here with a price target of $53, which would still imply an upside of 34%. Our high end price target comes in at $74 for an upside of 87%. If you've made it to our third stock today, this is a reminder to make sure you hit that thumbs up button. Our third strong buy S&P 500 stock with the highest upside potential is Micron. They trade under the ticker MU, currently priced at about $85 per share. Now, they have not necessarily had a tough year, as the stock did climb and hit all-time highs here back in June, gaining 22% overall, but they've been cooling off recently, dropping 36% from those highs in the last 3 months. Micron is a semiconductor chip company. In fact, they're about a $100 billion player in the chip field with a reputation for designing and distributing high-quality memory chips. The company was founded in the late 70s, and with more than 45 years of experience, their current product lineup includes 9th-generation NAND chips, DRAM memory solutions, and flash-based SSDs for optimized storage solutions at any scale. They boast that their memory technologies have helped enable the rapid recent growth of generative AI and real-time natural language processing systems. Micron shared a third quarter earnings and revenue beat back in June. Their fourth quarter is coming up soon in just a couple of weeks on September 25th, and expectations are for some big year-over-year growth. Shares dropped following their last quarterly report, as this Q4 guidance was largely in line with expectations, which was a bit underwhelming. The analyst consensus is for earnings per share of $1.11. That is compared to a loss of nearly the same the prior year. Revenue is anticipated to come in around $7.6 billion. For their Q3, they reported earnings per share of 62 cents, beating estimates by 14 cents per share. And revenue of $6.81 billion also beat expectations by about $140 million, growing 81% year over year. They said that AI demand drove 50% sequential data center revenue growth, and they had a record high data center revenue mix. In just the last couple of weeks, we have had a handful of analysts reiterate their buy ratings, but slightly lower their price targets on the Micron stock. An analyst at Needham cited that the company reiterated comments at their 5th annual virtual semiconductor conference that bit shipments across the DRAM and NAND would be approximately flat sequentially in their first quarter, and that gross margins would increase by about 200 basis points. The bit shipment commentary is incrementally more cautious than guidance given on the Q3 earnings call for them to strengthen modestly. Another analyst from Citi trimmed their estimates a bit on Micron, saying that a little bit of inventory is built up in the PC and wireless supply chains, and it appears Micron will end up increasing inventory, which adds risk to their near-term estimates. Micron has current ratings from 27 Wall Street analysts, coming in as a strong buy with 25 buy ratings and just 2 holds. And the average price target comes in at $166, which would imply an upside of 95% from current prices. Looking at those ratings down below, we can see those 3 analysts recently dropping their price targets a bit. Still some very high upside potential though. Our low-end price target is $140, which we have several of here, which would still imply an upside potential of 63%, while our high-end price target comes in north of $200. With $225 price target here for an upside of 163%. So that is a look at 3 strong buy stocks from the S&P 500 with the highest upside potential. Let me know your thoughts on these companies and whether you think they're due for a rebound soon. I always appreciate hearing from you guys. Keep in mind, these videos are never a suggestion to buy or sell any specific stock, so make sure you always do your own research and due diligence. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.